Ever feel like your quarterly dividend stocks are ghosting you for 3 months at a time? You're not alone. Waiting 90 days for a payout is like watching paint dry while your bills pile up. Let's fix that. What if I told you there's a weekly dividend strategy that turns those quarterly droughts into a weekly dividend income stream? No magic, no gimmicks. Just smart picks. 12 dividend stocks, handpicked to pay you every single week. Here's the scoop. We're not gambling on risky weekly dividend stocks that crash and burn. Instead, we'll layer high-yield stocks with rock-solid weekly dividend history, staggered across months. So one pays you in week 1, another in week 2, and so on. Think of it like a relay race, where you always win. This weekly dividend portfolio is built to turn monthly dividend income into weekly cash deposits. Yes, even from slow quarterly payers. Avoid sketchy, get-rich-quick traps. We prioritize safety and yield. Grow your weekly dividend income over time, because who doesn't want raises? And here's the kicker. That $24,000 a month goal? It starts with a weekly dividend list of reliable companies. No wild guesses, no hype. Just cold, hard deposits hitting your account like clockwork. Ready to finally feel that Friday payday rush every Friday? Let's get started. Your weekly payday is closer than you think. We'll start with the January, April, July, October squad. These 4 stocks form the backbone of your weekly dividend income, kicking off the year strong. Stock 12. Allstate Corporation, ALL. This isn't just another insurance stock, it's a dividend growth powerhouse. Allstate, trading around, offers a 3.68% annual dividend with a 1.96% yield. While the yield may seem modest, its strengths make it a staple for your weekly dividend portfolio. With a 12.5% 5-year dividend growth rate, Allstate has nearly doubled its payout since 2018. Its ultra-low payout ratio of 21.65% signals plenty of room for future increases. The stock also boasts rock-solid stability, with a beta of 0.52, making it half as volatile as the market. Add in its dirt-cheap P/E ratio of 11, and you get a stock that not only pays you consistently, but also protects your capital. Plus, with quarterly payouts in January, April, July, and October, it's the perfect rotation player for reliable income. Stock number 11. Medtronic plc, MDT. This medical device giant is the stealth wealth of dividend stocks. Medtronic, trading at per share, delivers a 3.92% yield, $3.28 annually, with a 9.6% 5-year dividend growth rate. Here's why it's a key player in your weekly dividend strategy. With a $119 billion market cap, this isn't some fly-by-night biotech. Its 85% payout ratio shows sustainability with room for growth. Plus, a moderate beta of 0.86 means it moves with the market, not against it. Whether it's pacemakers or surgical robots, Medtronic's cutting-edge innovations ensure steady dividends every January, April, July, and October. Stock 10. Philip Morris International, PM. Philip Morris. PM. Yes, the tobacco giant. But before you scroll past, hear this. PM delivers a 3.59% yield, $5.40 annually, with a global footprint spanning over 180 countries. Key stats highlight its strength. A 90% payout ratio, demonstrating a firm commitment to sharing profits. A 3.15% 5-year dividend growth rate, proving slow but steady progress. And a defensive beta of 0.57, meaning it holds up well during market crashes. Although payouts come in March, June, September, and December, we're strategically placing it in this group to balance sector exposure. Controversial? Maybe. Reliable? Absolutely. Stock 9. Realty Income. Oh, this REIT is known as the monthly dividend company, but here's why it earns a spot in our quarterly rotation. It offers a 5.81% yield, nearly triple the S&P 500 average. With monthly payouts providing 12 paychecks a year, we're using it to smooth cash flow between quarterly stocks. The 3.55% 5-year dividend growth rate may be slow, but it's steady and predictable. While the 190% payout ratio may seem alarming, It's typical for REITs. Plus, with a beta of 1.01, it closely mirrors the market's movements. Pro tip: reinvest those monthly dividends to supercharge your compounding. Stock 8. Altria Group, MO. The dividend king of Vice, this tobacco titan delivers a jaw-dropping 7.66% yield, $4.08 annually, making it a must-have for your weekly dividend portfolio. With an 80% payout ratio, it maintains sustainability backed by its addictive cash flow. The 4.1% 5-year dividend growth rate may be slow, but it's as reliable as compound interest. Add to that a bargain PE ratio of 8.15, making it cheaper than 95% of S&P 500 stocks. Plus, with a defensive beta of 0.68, Altria not only weathers market storms but thrives when panic sets in. These 4 stocks alone set the rhythm for your weekly dividend income. But we're just getting started. Up next, the February, May, August, November payers, including a pharma giant growing dividends at 14% annually. Stock 7. AbbVie. This pharma giant isn't just about blockbuster drugs, it's a dividend growth rocket. Priced near $193, it offers a 3.4% yield, $6.56 annually with explosive stats. A 14% 5-year dividend compound annual growth rate, doubling payouts since 2018. Its 80% payout ratio leaves room to fund groundbreaking R&D while rewarding shareholders. Plus, with an ultra-low beta of 0.56, it stays calm during market turbulence. From Humira to cutting-edge immunology drugs, AbbVie's robust pipeline ensures those February, May, August, and November dividends continue to grow steadily. Stock 6. Morgan Stanley MS. This Wall Street icon proves that banks can be true dividend stars. Priced at $139 per share, it offers a 2.66% yield, $3.70 annually, with impressive growth muscle. Its 10.52% 5-year dividend CAGR outpaces most financial peers, while a conservative 46% payout ratio ensures resilience during recessions. With a beta of 1.15, it moves with the market, not against it. Although payouts come every January, April, July, and October, we're placing it here strategically for sector balance. Pro tip: keep an eye on Fed rate hikes. They're rocket fuel for Morgan Stanley's MS profits. Stock 5. Texas Instruments, TXN. This semiconductor stalwart powers everything from your car to your calculator and your dividend portfolio. Priced at $183 per share, it delivers a 2.97% yield, $5.44 annually. The numbers tell the story. An 8.59% 5-year dividend growth rate, proving that tech dividends can be steady and reliable. While its 104% payout ratio may seem high, Texas Instruments, TXN, has bulletproof cash flow to back it up. With a beta of 0.96, it closely mirrors the S&P 500's moves. Payouts arrive in February, May, August, and November, making TXN the quiet engineer of your weekly cash flow machine. Stock 4. Clorox Company, CLX. Think bleach and Brita filters. But behind the boring facade lies a dividend fortress. Priced at $148 per share, it offers a 3.3% yield, $4.88 annually. Here's why it's a must-have for your weekly dividend portfolio. With a 133% payout ratio, it may seem high, but it's manageable for a recession-proof business. A beta of 0.41 means it barely flinches during market crashes. Plus, its 2.85% 5-year dividend growth rate proves that slow and steady wins the race. With payouts in February, May, August, and November, Clorox is truly the cleanup hitter of your income strategy. With these 5 stocks, you're now covered for 8 months of weekly payouts. But we're saving the best for last. Up next, the March, June, September, December payers, including an energy titan printing 4.4% yields and a green energy disruptor growing dividends at 12% annually. Stock 3. Chevron Corporation, CVX. Chevron, CVX. the dividend titan of the energy sector. Trading around $155, this oil and gas giant delivers a juicy 4.4% yield, $6.84 annually. Here's why it's a cornerstone of your weekly dividend portfolio. With a 6.49% 5-year dividend growth rate, Chevron thrives even amid the renewable energy transition. Its 70% payout ratio balances generous shareholder returns with reinvestment in green projects. Plus, a P/E ratio of 15.98 makes it a steal compared to most S&P 500 stocks. With a beta of 1.10, Chevron moves with the market but generates enough cash to keep those March, June, September, and December payouts rock solid. Stock 2. NextEra Energy NEE. This isn't your grandma's utility stock, it's a green energy dividend disruptor. Priced at $68 per share, it offers a 3.33% yield, $2.27 annually, with explosive growth potential. A 12% 5-year dividend CAGR means it doubles payouts every 6 years. Its 68% payout ratio fuels a massive $50 billion renewable energy expansion plan, ensuring future growth. With a beta of 0.58, it stays steady through oil price crashes and Fed rate drama. Quarterly payouts in March, June, September, and December make NextEra Energy NEE the ultimate set-and-forget stock for your weekly dividend strategy. Stock 1. Sonoco Products, SON. This packaging powerhouse proves that boring can be beautiful. Priced at $48 per share, it delivers a 4.36% yield, $2.08 annually, with some under-the-radar perks. Its 71% payout ratio is sustainable for a company that literally boxes up global commerce. With a beta of 0.66, it barely reacts to market tantrums. Plus, a 3.5% 5-year dividend growth rate may be slow, but it's relentless. From Amazon packages to food containers, Sonoco's reliable payouts in March, June, September, and December keep your income rolling, no matter what's inside the box. Here is the projected performance of your weekly cash flow portfolio, built with an initial investment of $20,000 in each of the 12 high-yield stocks, total $240,000, with a 12% annual growth rate and a 4% dividend yield. In year 1, your investment grows to approximately $268,800, producing an annual dividend income of about $10,752, which translates to a monthly cash flow of approximately $896. By year 10, the portfolio expands to about $745,403.60, with annual dividends reaching approximately $29,816.14, providing a monthly income of around $2,484.68. This growth highlights the strength of long-term compounding and makes this portfolio ideal for those seeking reliable returns from weekly breakout stocks. By year 20, compounding accelerates your portfolio value to approximately $2,315,110, generating $92,604.41 annually, or approximately $7,717.03 per month in dividends. Finally, by year 30, your disciplined investment approach pays off tremendously. The portfolio value soars to approximately $7,190,381, producing annual dividends of about $287,615.25, which is approximately $23,967.97 per month, ensuring substantial and stable weekly cash flow for financial independence. Quarterly dividend stocks. Cramming your income into 4 paydays a year? Flip the script. Build a weekly cash flow portfolio with 12 high-yield stocks. Staggered payouts equals weekly dividend income. Cha-ching every Friday. Like and subscribe for more weekly stock picks that turn patience into passive income. Reinvest, repeat, retire earlier. Cheers!